Hi, welcome to this video day, 16th of April. It's Sunday. In today's video, we're going to be looking at a trading strategy for trading reversals. Now, in terms of trading reversals, we're going to be looking at three pairs. We're going to be looking at Euro USD, GBP USD, and the USD against a lesser looked at currency, which is going to be the Polish zloty, so USD PLN. We'll go to the charts in just a moment. Now, in terms of trading trend exhaustion and looking for reversals, you can build a strategy that gives you low risk and very high profit potential. It's one of our favorite ways of trading. Now, we're going to go through the techniques that we like to use when we look at the trade setups. But just before we go and look at them, if you want to learn our trading strategy, check out all our techniques as well as our daily technical sentiment analysis of 14 FX pairs, including the three we're going to look at right now. All you need to do is go to the link beneath this video and you can get limited live access to our member center. You can also follow our Facebook page, join our Facebook group of traders if you wish, and finally join our free educational mailing list. Right, let's go and take a look at the trade setups. All right, we're on Euro USD monthly chart. Now, in terms of, just want to look at this chart really quickly before we go to the daily chart to do our levels of entry, stop and target. Because two levels I want to keep in mind. Resistance at 110.40. And I think this is good resistance. We're testing it at the moment. Four tails, okay? Then we break above the level. We push to the upside. Then we come down. We briefly come back up above the level after poking through it. Then we get a big red continuation to oversold. We're back at the level. I think it's a good level of resistance to hold on a closed basis. In terms of support, four bodies lining up around 108.40. Now, in terms of technicals, you can make an argument for it going either way. You need to know the fundamentals and sentiment behind the chart to give you clues to where this pair might go. And I think the fundamentals and sentiment point to a really good correction to the downside. So I now want to shift over to the daily chart. All right, Euro USD daily. I'll draw levels of entry, stop and target in terms of a break lower and a potential break higher in a moment. Now, in terms of the fundamentals and sentiment, I think the odds favour a break to the downside. Just go through the points. Point number one, in terms of the USD, the market expects a dovish Fed, so maybe one more rate hike, then numerous cuts into the end of the year. That's due to a slowing economy. I think that story is now largely getting discounted. And in terms of it, I just want to show you this chart here, why I think it's getting discounted. Now, you've got the US 10-year bond here. When that is rising, interest rate perceptions in the bond market are going up. Now, this line here, the orange line, is against the purple line, which is the dollar index, dollar against a basket of currencies, with the euro being the major component of the dollar index. Now, in our view, dollar is oversold in a lot of pairs, obviously against Euro USD. Now, if you look at the dollar index, it's falling here where my cursor is. But look at the bond market, it's bottomed out and is heading higher. This gap now is pretty wide. Just look at this gap back here in Q1 2023. Dollar was selling off to the downside. Bond market then picks up, okay, to the upside, and the dollar index follows it. Are we going to see the same again? I personally think so. Just feel the gap is too wide. Now, in terms of inflation and interest rate cuts, here is inflation, super core, headline and core. Core, the Fed are focused on. Look at it, it's not coming down at all, is it? It's basically flatlining or just going a little bit to the upside. Now, it's a long way from the Fed 2% target. Now, in terms of interest rates and cuts, this is a good chart to keep in mind. Someone posted it in the Facebook group, so I'm going to use it. It's a really good one. Fed rate must hold above CPI for some time to stop inflation. You can see it where they've highlighted with the red arrows here on the left. Yeah, we're basically at the same level here, okay? So even if inflation falls a bit, that Fed funds rate must not come down too quickly to tame inflation. Obviously, if the Fed do embark on rate cuts, that's already factored in. Okay, let's go back to the chart. And my next point, complete opposite to the Fed. The markets expect a hawkish ECB, an economy to avoid recession. Basically have okay growth. Now I think in terms of hawkish ECB, I think they could well be as hawkish as the market expects, but that's kind of in the price now. The economy to avoid recession, no, I don't go with that argument at all. You can already see the economy slowing. Here, Eurozone industrial production against leading indicators. Leading indicators are plummeted. Industrial production will follow. Now, in terms of if we look at what's going on, because we've had interest rate hikes, you've got contracting money growth. That is not obviously good for economic expansion, okay? And you've got here credit standards already tightened and loan growth has largely stopped. It has. Yeah, they're not borrowing in Eurozone businesses. They're not looking to expand. They're looking to kind of retrench. How about the consumer? Energy crunch was avoided, but consumers ain't looking good. I think it's quite a good chart. You can see consumer sentiment going down. But the energy crunch, a lot of people think that's just over. No impact really on the Eurozone economy going forward. But if you look at it, natural gas has corrected strongly, but prices remain elevated in historical terms and likely to rise as the EU competes with Asia to refill storage into Q4. If you look at the period 2010-2021, natural gas got up to around 28. That was kind of the peak. Then you have that huge rise and then the fall. But if we look at prices, they're 46% above the 2010-20 peaks. Okay, that's still a significant cost. Also, keep in mind that most of Eurozone natural gas is bought on the spot market. It's not on forwards. They can't lock in price. So if prices do start to rise again, EU will be in trouble. OPEC recently did that production cut. That will support crude oil prices. EU imports all its crude oil. Okay, so we think the good news is in for the euro. Let me just go back to my chart. Where has it gone? Here it is. Right, in terms of point number 3, China showing weakness. It's a major export market for the zone and Germany in particular. A lot of optimism about big Chinese recovery after the COVID restrictions were lifted. You did see initial surge in economic activity. Now data is disappointing. There's going to be no big recovery in China. In our view, that is bearish for the euro. Energy impact, I've already covered that, bearish euro. Geopolitical concerns and risk off, if they come into play, bearish for the euro. Plenty of geopolitical problems. You've got Russia, Ukraine, China, Taiwan. You've got just so many problems in the global economy. Banking crisis, I don't think that's over. So if we move to risk off, the dollar will strengthen. Speculators have already gone heavily long of the euro on the good news. Sorry, how much more buying power is left? I don't think we have too much left. And I think Friday's candle could be showing signs of a reversal. So let's draw levels of entry, stop and target. Right, let's have a look at level of support. And level of support, I think, is there. Okay, you had a double top previously and we came off. You get up, you get above the level. Okay, make a new daily high, red finish on the level. So if I just draw that trajectory in there, yeah, probably don't need it. We can see the new high and no more buyers up there. We could, of course, flick higher. If it flicked up towards the 111 level, you could look to trade weakness off the level or off the high. But at this moment in time, we're looking for a break lower. You want to get clear of the round number 110. I'm going to say 109.70. Okay, now I did say that on the monthly chart, you've got monthly support at 108.40, which is basically here. Okay, it doesn't give us, I'll go to my stop in a minute, it doesn't give us much of a risk to reward. It's only about 2.5 to 1 if we shoot for this level. Okay, what we're going to do is go early and be mindful of this level when we get there. If it were to break, our stop will obviously probably come down. We might add through that level, but at this moment in time I'm looking for a bigger correction. I think 107. Okay, so here, so basically, so let me get my line straight. Is that straight? There we go. When we came down, came back again, nearly got there. So I think 107, yeah, speculators are heavily long. We're looking for them hopefully to get hit on stop. Then I think we're going to go down towards the 105 level, okay? The speculative position is big enough to target this level. Where would your stop be? Well, you've got resistance here on the bodies. Sorry, let me get that line straight. I wouldn't put the stop right behind here. I'd go back behind the tail. So I'd go 110.80. That's on a break lower. If it goes higher, look to sell weakness. I don't think a rally will be sustained. I think, yeah, the bullish or the good news is in for the year, and we should see some downside action. And these here, 107, 105, are a longer term targets. Right, where should we go next? We go GBP USD. Right, GBP USD monthly chart. Just see big picture like we did in Euro USD, and what you can see is a big decline from above 140. Then look at that for an exhaustion tail above 103. Then we mount a short covering rally. You'll see 4 candles here that I'm highlighting with tails above 124 that try and reach 125. They don't quite manage it. 125 is a big level. We do get through it this month, but we fall back, okay? We're looking obviously for this rally to end and the pound to turn lower. Just go to the daily chart. I'm using the chart from our member center for this one. This is a fairly straightforward trade in our view. You come up above 124 here where I'm highlighting, follow on above 125, can't hold the level, okay? Double top, go down, rally back above 125 and close above it, new high on Friday, no more buyers, and then we come down towards 124. We see the pound as a rally back to 125, so you'd look to sell off the level on weakness or on a break of 124 for a move down to 120. Pound has really benefited from dollar weakness. I think dollar weakness was mostly to do with this move up from 120. So we're expecting a return back to 120. Next week we'll have some key data in relation to the pound, which is wage growth. Bank of England meet on May the 11th. We've got data on wages next week and on inflation. If they come in as we expect, the Bank of England will not raise rates on May the 11th, and that'll be bearish for the pound. Although we think it's overbought anyway, this data will help next week. Now, wage growth, it is easing back. You can see it here. Basically, regular weekly pays increased just by £1 on average over the past 2 months, okay? Compared to a rate of £3 to £4 per month through much of 2022. So wage growth is easing. That's good for inflation. We're going to get inflation as well next week. Bank of England said it thinks it will stay broadly unchanged in the short term. If it does, they will use that as an excuse also to hold rates. You might see a little bit of an increase in services inflation, but we think it will take a big upside surprise to put the odds in favour of another rate hike in May. We think that's unlikely. Okay, you can see the chart here with services inflation easing back. So yeah, it's just 2 big levels you're looking at. 125 here, 124 here. That should hold rallies on a closed basis. This level gives way, then down towards 120. Obviously, you break lower, you can trail your stop down. I'm not quite sure how we're going to do that just yet. If it does occur, you can always follow our daily updates in the member centre. We're actually already short, as you can see, at 124 180, stop tight behind the 125 level. Yeah, looking for 120. Now what we're going to do is look at our last pair, which is one I really like, which is USD PLN. All right, USD PLN, we do have a really big rally in the USD, get overboard, and then we correct back, and we've come down to test 420. Okay, now in terms of 420, it's a important level. A couple of bodies here, couple tails get above it, but then they come down. Three tails here come off the 420 level, then we break above it basically here. Okay, now 420 I think is going to be a good support level. If it really gives way, then that will negate our bullish view, but I think hopefully it will hold. If we look at daily chart, you can see dollar has been in a big downtrend. We thought it would have picked up to the upside by now, but it hasn't. PLN has benefited from euro strength. Okay, so that's helped strengthen the zloty. But in terms of the zloty, the Polish fundamentals are terrible, in our view, much worse than most countries in Eurozone, which we think will weigh on it going forward as well. In the short term, we're looking for the euro to correct to the downside and basically the Polish zloty to follow it. Now, in terms of the Polish fundamentals, I'll go through them in a separate video next week. I'm really interested in this pair because there's the potential for fat tail risk to come into play. Fat tail risk is a risk that comes in which creates big volatility, which the majority are not expecting. Okay, I'll do a separate video on the Polish zloty next week, going into it in a bit more depth. But in terms of the way we see it, we break the 450 level here, and you try to get through it but can't. This is back in December. Get up to it again in February, can't get through the level, and basically we fall away with the euro helping push the USD down against the PLN. Now, in terms of this tail here, it goes below 420, new low on the daily chart, below monthly support. Then we pick up, and this tail here touches these two bodies. An aggressive entry through here, I think, and you should see follow through buying to the upside. USD deeply oversold, and I think you could get to 450, maybe even higher, as you can see from my trend lines. But the 470 level would probably rely on fat tail risk coming into play. Like I said, I'll do a video next week covering the zloty in more detail. Now, in terms of all the pairs, I think USD, very oversold in all three pairs, and if we do get upside momentum in the USD next week, that should follow through. We shall see. But that is the video for today. Thank you very much for watching it.